Hello guys and welcome to the Kinski channel and to the highly anticipated open low high close entries and exit edition, and this is part 2, right? So please pay attention, listen, get your journals ready, pay attention, listen to me if you feel like you can listen, and also do watch the video over and over again. If you don't understand it, take your time, take your sit down during your leisure period, watch it again, take your notes, take your journals, and do what reminisce over whatever you're going to learn excuse me, in this video, right? And I want to apologize again which has almost turned to my custom, for the delay in the video, right? I have a personal life outside trading. I don't just sit on the tab or my laptop to make video all day or to trade all day, as the case may be. I have a personal life outside this, right? So do take my apologies, and please pay attention to every detail I'm going to share out here, and I'll be straight to the point. I don't have time. There's no need for ranting and all of those stuffs. And also, thank you so much guys for the support thus far, and it really means a lot to me. And for the people that are already making massive results just watching the part 1 of the open low high close methodology, I'm so happy for you. I've gotten tons of messages, and it really means a lot, right? It really means a lot, and I'm so grateful for the little results you guys have seen, just apprehended little information out there, right? So I want to also share a little bit of what information before we proceed. Now, everyone is welcome to watch this, both the people that don't like me and the people that does like me. So do watch and do enjoy yourself, right? So first thing is first, I want to talk about this little stuff before we proceed into the what nitty gritty we have for the day, right? So the first thing I want to talk about is what the rate of the ongoing misinformation, industry bankruptcy, and disdain when it comes to forex trading is way over the roof. Like literally is way over the roof. So I just want to put it out there so that whenever you intend, listen to me carefully, whenever you intend to do or to subscribe to an individual, whether on YouTube, whether on X, whether on Twitter, whenever, any social media platform, I need you to look out for these 3 things, right? These 3 things before you do what? Pay your money, right? And you have the right to all these 3 things. So I need you to do what? Look out for them before you do what? Pay your money to whoever that person is. I don't care who the person is, but you need to look out for these 3 things before you do what? Pay your money. Number 1 is this, please, integrity. Yeah, so integrity. Now, it's very important, and obviously nobody's 100% accurate, nobody's 100% clean, nobody's 100% without stain, as the case may be. Now, but in your course of adventure of trying to learn from someone or somebody, whoever the cases may be, you need to watch out for integrity. The reason for this is simple. Yes, you cannot elude the factor whereby there are people, brainless people, dumb people, people that are, warmongers, people that don't have sense. All they have is propelling what? Criticism. I do have such kind of people. They don't like you for no reason. They just don't like you because you are doing the things they cannot do. I'm making money, you are broke, right? And some of them are listening to me, because this video is directed to those people that are listening to me with genuinity of heart, and those people that are listening to me out of the criticism of their heart. So for no good reason, you don't like somebody. Now, in all essence of ramification, that person is doing well more than you. He's doing the things you ought to do that you were lazy to do. But for the sole purpose of what? Little glimpse of what? Accomplishment, achievement, some success. You turned out to be a critic rather than being what? Somebody that humbles him or herself to do what? Learn what produced that result. So we're not eluding that factor. We're not eluding it, but it's not important. So you just have people out there that don't like you for you. Do you understand? You are good, you are great. They have never encountered you before. I had somebody like that. He made a nasty comment on my YouTube. I don't know the person from anywhere. I don't know him from Adams. He just woke up and said, okay, this person is a fake person. You don't know me, brother. You have never seen me before. You don't know my track record. You don't know what I've put into this game. Do you understand? Because somebody out there ripped you doesn't mean that every other person is the same. You need to get that at the back of your mind, right? I'm not the source of your unhappiness. Something else is the source of your unhappiness. I need to fix it. So that being aside, if you are going to select somebody, if you are going to learn from somebody, and this is something that I do by myself, because the journey of learning never ends. I do learn myself. I do pay people to learn from them. Not because maybe what I teach, what I do, what I apply in the market does not work. No, I'm going to tell you the truth. The sole purpose of what? Fraternity, relationship fraternity. That's all. I just want to be acquainted with this person. So I'm ready to spend any amount of money to pay his course, whatever the case may be. Not really to learn his course, because I have a concept that is working and is doing well for me. But for the sole purpose of a relationship. Do you understand? So for you now that is applying for the sole purpose to learn from that person, make sure that person has integrity. Yes. If there is no clean slate, don't learn from him. And that includes me. I'm telling that to my students, which leads me to number 2. Ask them for track record. Ask them for what? Track record. Where is your broker statement? Where is your payout certificate? Don't show me certificates that you passed phase 1. That's not my business. Show me your payout certificate. Show me your RINS app, your Rice Pay app, right? Show me the statement of your broker for the past 3 months. How consistent are you? Whether it's a big account, a small account, I want to see it. Are you profitable? Because you can't give what you don't have. If I don't have it, I can't give it to you. No matter how I teach you, you're going to stumble along the way. It's only a profitable person that can actually teach you profitability or what made him profitable. But in that sequence, he can only teach you that thing. You are the one that responsibility downs on to do what? Play an important role, a very, very crucial and important role of what? Hard work, study, research until something happens to your life or happens to your trading journey. So any single person you are going to submit your hard-earned money from, please, they should have these 2 things. You have the right to ask them. Yes, you have the right to ask them. It's going to curb a lot of this moral decadence you have in this industry. Ask me. Do you understand? I can just come on X, come on Twitter. I can post before, post after. I can edit screenshots, though I don't know how to do those stuffs. But you can edit screenshots. You can literally do all those things, manipulate figure and put them out there. But can you manipulate a prop firm payout? You can't. Can you manipulate the broker statement, a license regulated, legit broker statement of your trading history for the past few months? You can't. So you have the right. I feel like I should just put this out there. You have the right to do what? Demand of all these stuffs before you venture into learning. Pay attention. That's 1. 2, I don't run a signal group. I will never run a signal group. I don't run a signal group. I don't run signal services. I don't do accounts management. I don't do investors bullshit, all those stuffs. I don't do that. Any page affiliated to me, any page, especially, I'm talking this especially for Telegram subscribers. Please, any page you see, it looks like me. That's not me. It's not me at all. Because I won't do such. I will not even DM you first. Do you understand? The only people, you don't even have access to me, except you're on Telegram. Do you understand? So I don't run all those stuffs. So it's a disclaimer so that you do what? Be very, very careful. Don't be dumb. Don't be a retard. You know better. I don't even think you should be scammed in this 21st century. It means that you are lacking behind. right? People can just pull off figures and all of that. So that being set aside, enough of the nitty-gritties. Let's jump into the real video of the day. Open, high, low, close, open, low, high, close, part 2. Entries and exits. I'm going to be straightforward, straight to the point. There's nothing like hiding some information. I'm showing you what it is word for word. And if you put it to practice, you're going to see crazy results. And I'm not over-exaggerating. You're going to see crazy results. Because this is the results that drafted me out $10,000 payout from Funded Next. Yeah. And they took away was it $3,000 for margin rule bullshit. Let me show you. I'm not supposed to, but let me show you. For margin rule, etc. and etc. Stuff like that. Yeah, so this was it. As you can see. So they took away $3,000, $3,300 and gave me $4,200. You know, roughly whatever. Yeah, so this is it. Made $10,000, and at the end of the day, these guys. But that being set aside, right? So I'm just trying to show you that this concept that I'm showing you is what pulled me that figure. Do you understand? And have made me to pass many other challenge, which are going to be seeing the figures very soon. Do you understand? So pay attention, listen to me if you feel like, okay. Now the first thing is first, open, high, low, close, open, low, high, close. The first thing is first, you need to understand two types of things. The type of trader that you are. I don't know why this is, getting me annoyed, but let me manage. The type of trader that you are, that's one. You need to understand the type of trader that you are. Then you need to understand bias. Very important and very paramount. Now, the reason I say that, okay, let's just have it right here. Yeah, this should be better. Okay. I'm going to be writing it for you people. So number one, you need to understand what the type of trader that you are. Then what? Bias. Good. You need to understand the type of trader that you are, then bias. If you open the chart, what are the few things that you start looking out for? Now, let me break this down into a more simpler terminology. Good. Now, you have different types of trader. When we say types of trader, you start, okay, scalper, intraday trader, day trader, swing trader, position trader, whatever as the case may be. Now, I'm going to use the type of trader that I am to give you an illustrative example of open, high, low, close, right? Now pay attention. Now, I'm a daily range trader. Does that make sense? I'm a daily range trader, and because I'm a daily range trader, I focus on the daily time frame. That's one. So I'm a daily range trader, and I focus on daily time frame. So the first thing I do after understanding the type of trader that I am, if you're a scalper, we're going to come to that, right? So chill, relax, just pay attention. If you're a daily range trader, just like I am, the first thing I want to do, right, is have this fragment understanding that what my bias is built on the weekly time frame, stroke what on the daily time frame. On the daily time frame itself, this is where my bias is built. Do you understand? It's built on the weekly time frame or on the daily time frame itself. So as a daily range trader, I don't have business with what going down to what H4 time frame. What do I want to do in H4 time frame? Or going down to what H1 time frame, as the case may be. What do I want to do there? Nothing. I have no business with those time frame except for entry purposes and exit purposes. Do you understand? In the previous video, I taught you how to trade the open, low, high, close, right? And the open, high, low, close for C3. That's not what I'm teaching right here. I'm teaching you how to trade the open, low, high, close and the open, high, low, close as a single candle. Do you understand? Down to entries and exits. That's what I'm doing. So in order to arrive at this core value, you need to understand the type of trader that you are and the time frame your kinds of trader build their bias on. For me, I build my bias on the weekly and the daily time frame. My short-term, immediate bias, I build it on what? The weekly and what? The daily time frame. Excuse me. My short term what? Short term bias. So just pay attention. This for my short term bias. Then for my long term bias, I build it on what? On the what? Monthly time frame. Do you know why? It's because when I build it on the monthly time frame, I now have an idea that I'm gonna be trading, my daily range or my daily open high low close and open low high close up all the way until a particular monthly target is hit. I don't know if it makes sense. So this is like a long time what? Bias. Listen to me, guys. Pay attention. If you pay attention to what I'm teaching you right here, you have saved yourself some few months of struggle from trading. And I'm not over exaggerating. I'm telling you the plain truth. Yeah, I'm telling you the plain truth. This has made me money. Yeah, it has made me money. So for my short-term directional bias, I'm going to build it on weekly or monthly. So I have an idea of where the market is going to head to for that week or for that day. Do you understand? It's different from having an idea from where the market is going to head to for the whole month. And how do you build your directional bias? How do you build your directional bias? This is where your understanding of what the highs and the low comes into play. You build bias. You build what? Bias by understanding highs and low. That's all. By understanding what? Highs and low. Easy peasy. That's how you build it. Type of trader, check. By understanding what? The highs and the low. This is very important. This step one, very important. We have not gone deep. Just pay attention. Listen to me. This is amazing. You are learning a lot. Okay, let's go. Okay, where are you? So this step one. Yeah, so this step one. Understand the type of trader that you are. Then understand the time frame you build your bias from. Then understand how you build your bias. Do you understand? Now, let me give you a live example. So, this is gold. Now, let's build a bias. Let's build a long-term bias. If I'm building a long-term bias on gold, right about here, this is what I'm seeing. Right? We have this range high down towards this range low. Right? So, this is a sustainable what? Long-time directional bias. Sustainable long-time directional bias. Why? Because we built it what? On the monthly time frame. So what does it mean? I want to be trading the open high low close or the open low high close all the way until what? This low has been hit. I want to be trading the open high low close or in this scenario, because it's bearish, the open high low close all the way until what? This low has been hit. I want to be taking a chunk. This strategy in itself is actually taking a chunk. You can decide to catch the whole move if you wish, or you can just take a chunk out of it. So in this scenario, we are trying to take a chunk because I'm going to show you open high low close for daily time frame, and I'm going to show you open high low close for H4, H1, H2, H3 time frame, etc. and etc. as the case may be, as time permits me. Do you understand? But in this particular scenario, I'm showing you open high low close for daily time frame, how to single-handedly trade a single daily candle, because a daily candle will open, make a high, dump, make a low, and close, or it will open, make a low, pump, make a high, and close. It's going to do either of these two things. It's going to be a bullish candle or a bearish candle. And if it's a bearish candle, it will start by making a low first. If it's a bullish candle, it's to start by making it. Sorry, if it's a bearish candle, it's to start by making a high first. If it's a bullish candle, it will start by making a low first. Very important. Very important, and what? Simple. Do you understand? So I've built a directional bias right here. This is the monthly range. right? How did we build this bias? Understanding the highs and the low. This high right here was swept off, right, by this particular March candles high, and did what? It's now back within the range. So understanding what the highs and the low is going to help you do what? To map out the bias for either a long-term bias or a short-time bias. So in this scenario, it's a long-time bias. Now let's give you a scenario of what? A short-time bias, as the case may be. Just listen to me, pay attention. You guys are learning a lot from this video. Unfiltered, you are learning a lot from this video. So let's go to the daily time frame. So this is the daily time frame. I just showed you an example of building a long time bias and a short time bias. So this is what a daily time frame. What do you have right about here? Now I'm going to show you something very, very simple. A CRT trader, which I like to call them, or a range trader, okay, which I don't like to call them, I mean. So, but a range trader is expecting, that was trading on Thursday, is expecting market to take out this Thursday high, tap into this fair value gap, right? Then head to take out what? The low. Head for Friday to take out the low. This is what a typical CRT trader might be expecting. That is a bit even a little more advanced compared to others. Because what these people do, what this pathanic trader, as you call them, do is simple. Because now don't get offended. It's the pattern that brings about the logic. That's dumbness. You don't know anything. It's the logic that bears the pattern. What's the logic? The formation, the sequence, the time arrays that all these candles. Do you know that every highs and low is timed? The opening of the candle is timed. The high is timed. The entry is timed. The exit is timed. The low is timed. So what's so pathanic about it? Nothing. There's nothing that wrecks trader like applying the pattern. Oh, this is a pattern. I've seen it somewhere. You're going to get wrecked. There's a logic that bears that pattern. Logic is superior. And I'm saying this because somebody might going to say, oh, the pattern doesn't bear the logic, bro. It doesn't. Do you understand? It doesn't. So, if everything is time, where is the factor of pattern coming into the picture? It's because everything is time so much that it's recognizable. The pattern becomes recognizable. But if you still miss the equation of the logic inside that pattern, you will see that pattern 1,000 times and take stop loss 1,000 times. Now, that being set aside, this is what a typical range trader is going to expect. At least the one that is way advanced. The one that is not advanced is just simply expecting to see a 3-candle formation, sweep low, C1, C2, C3, expansion. This is what they're expecting. And it's so pathetic. This is exactly what they're expecting. 1, 2, 3 candle. Or at least 2 candle. That's what they're typically expecting. And they don't care where it forms, how it forms, the order flow. Nothing. The moment they see it, they're like, yes, this is the CRT that what's it called? What's this man's name? Romeo taught them. And they start doing what? Buying. And for a few times you're gonna make money. But obviously you're gonna lose money more than you make money doing this. Because this is random. You are randomly trading. You don't randomly put money on the table. This is a multi-trillion-dollar market. You don't randomly put money on the table. Do you understand? Now, should I use the backtest tool? No, I'm not using the backtest tool. Now, this is what somebody might be expecting to deliver all the way into this long time target. This is what they're expecting. Probably something like this. And they are not wrong if they're expecting something like that, as the case may be. But pay attention and listen to me, which I called this trade in the Telegram group. I gave you guys a trade idea. Now, look at this. This was Thursday high and this was Thursday low. We are trying to do what? Build bias. Listen to me, please. Pay attention. Take your notepad and your journal. Pay attention. You are trying to build a short-time bias. I'm not a swing trader. I don't like holding trade for long. What's my business? I don't want to hold the trade all the way from this zone, and go all the way to. I don't care about that. Yeah, would you make good money? Yeah, but I make money more than most swing traders. What's the essence of I don't want to? I just want to take a chunk and go. Now we're different. That's my personality. Your personality might not be like that. Do you understand? Due to work or whatever as the case may be. So, but we're different. So in this sequence, we want to build a short time bias. And how is this short time bias built? Simple. Remember, we have fixed the factor. This is a cognitive example of trading open high low close or open low high close of the daily time frame as a daily range trader. Single candle. Pay attention. So this is the low right here. I call this trade. You can go and check it on the Telegram. And I've called a bunch more trade like this. So this is the low right about here. We are bearish, right? We're bearish. We're expecting price to do a tank, keep tanking lower until this sell side liquidity has been hit. We have built a bias. We understand that we're daily range trader. We have built a bias. And now we want to now do what? Put all these things into implementations in the live chart. So how do you want to do? So I want to see the market listing, how it opens, how the candle opens is important. Forget about the highs and the low. You don't want to be catching a sniper entry into loss, a sniper entry into your SL. I'll view one's profit. Do you understand? Yes, I want to catch the tip of the reversal. Good for you. I don't care about my entry. If I'm in the right order flow, I don't care about my entry. I just want to enter. I just want to enter and do what? Capitalize on that move, as the case may be. Listen to me, guys, and pay attention. So, because I'm bearish, the organogram of XEUSD is bearish, and we have sell side liquidity littered everywhere as targets to be met. Henceforth, remember, this is Friday's candle and it has not formed yet. This is Friday's candle. Before it's formed, this was the thought process I had. Do you understand? I expected Friday to open, make a high and dump. Simple. That was all I'm looking for. And I'm interested in participating in the dump the moment I experience what a CSD. Now, this is where I'm going to start talking about entry. Do you understand? Good. So the markets, I'm saying good as though you people are responding. Forgive me, that's how I teach. So this is the opening price. Price opened right about here. Pay attention. Price opened right about here. Let's turn this to red and let's label it opening or DO. That's daily opening, right? Now, what time do I mark this daily opening? The moment the candle opened, the reset time has been resetted. This should be, I think there's, what's it called? Daylight saving. So the time has elapsed by maybe 2 hours or 1 hour or so, as the case may be. It's not, some people, I'm seeing some people most of the time in the comment section, they're asking me, is it New York? How does daily open and New York, whatever? It's midnight. Midnight. You are marking the midnight opening. That midnight opening of the candle, that's what you're marking. Right? So that's the daily opening right there. Let's make this writing red. Sorry. So I'm marking the daily opening. What do I want to see? Let's go down to what? H1 time frame. Now, what do I want to do in this H1 time frame? Why am I even choosing H1 time frame? I'm choosing with H1 time frame because it's more confident. It gives me more confidence to trade H1 time frame once I've seen a CSD. I don't want to believe CSDs from lower time frames because those lower time frame can be snakes. Do you understand? Those lower time frame can be snakes, as the case may be. Does it make sense? So this is one. Now the market opened, right? This is Asian session right about here. This is the opening price. The market opened right here and did what? The first thing it did was that it made a high. Are you seeing? It's made a high, rallied all the way into the upside. Now, this is where you start paying attention to something like this. Please listen to me, guys. I'm sharing a lot of information here. This is where you now start paying attention to the types of high that the market is making. Now, because once a candle opens and it makes a high, it's trying to make a high, a bearish candle, it's opening and it's trying to make a high so that it can dump. Pay attention to the wick. Pay attention to the wick. It's very important because if you notice that the high starts becoming very long, that's just it. It's invalidated. Leave it already. Because long wick supports only reversal. You don't want to trade candle with long wicks except you're a bit experienced when trading that. You want to trade candle with short wicks because they propels massive expansion. They are short wick. They are very short wick. In this scenario, this is short wick. There are other examples where you have a very short wick. Now, because this is a sell organogram, I want to sell. We're looking to sell. The first thing we notice is that price opened and did what? It made a high. Now, you now measure what kind of wick size it. This was the high it made. It stopped around here. Then started coming down to do what? Create a CSD. You now measure it. Is this a short wick? Is this wick? Is it long? Or is it short? If it's long, don't expect price to deliver all the way into this target. Yes, because it's a reversal. It might just probably range there. Then expect the next candle to open and do what? Hit the target. But if it's short, of course, price is going to hit the target. Why? Because short wick will always support expansion and long wick will only support reversal. It's in rare cases that long wick supports what? Expansion. And this has to be propelled by what? Fundamentals or news factors. Do you understand? That is the only exemption where you have long wick propelling what? Reversal plus expansion. It rarely happens, but that's the only scenario where you tend to see it actually do what's happened. This is you trading open, high, low, close on the daily time frame. This is me showing you the example, literally. Do you understand? So price opened, price made a high. Listen, pay attention. Price opened, price made a high. This high, I took this high. This high that happened right there, I took it. I can't explain why I took the high, as the case may be. That's just by the way. I took the fake buy because that's a fake high. Do you understand? So price opened, made a high, and came back into the opening price and gave you what? A CSD. Right about here. This was a CSD that was given to you. This is your entry. This is where you start, inculcating your entry, what's it called? Criterias. Do you understand? I'm not talking about time. Erase the fact of, time, price. Remember I told you that a typical daily range trader or CRT trader will expect this high to be evaded. Then they will expect model 1, then boom, expansion to this low. Me, I'm showing you how to trade the open, high, low, close of a single candle. In this sequence, it did not take this high. Do you understand? So it just did what? Opened, made a high, come, and gave you what? A CSD right here. This is what we needed. Entries are irrelevant if there's no CSD. Please listen to me. If there's no CSD, there's no trade. Ignore, abort. Don't say, if it looks as though price is going to create a CSD, then you start jumping in for early sales. You will suffer. Your account will suffer. Your trading equity is going to suffer. If there is no CSD, if there's no shift in state in delivery, below the daily opening, below the opening price, it's irrelevant. That trade is what's irrelevant. And I'm going to show you an example where I missed it. Do you understand? Now, having said that, once CSD occurs, the next thing you start paying attention is what? Key level. What are the key levels that is what? Around that opening price. Now, that opening price itself can serve as a key level, but in other scenarios, you can see breakout blocks or probably an order block around that opening price. Now, this is what I'm going to show you. This is just the entry. I believe that might help a lot of you. There are way more tons, lot of different types of entries that I used, because in this particular example, I entered around here. Yeah, I entered around here. And you might want to ask me, why did you enter around here? Please hold your question, right? When you trade long over time, the way I do, trading this concept, your eyes will be open to see it. You will know when the setup will fail. I don't know how to explain it. It just becomes acquainted with you. Do you understand? Now, let me clear this up. Your eyes will just be able to see it. Do you understand? So, this is the CSD. This is the CSD. This candle. Look at what I'm pointing, please. Look at what this H1 candle closed below. You need to see a closure below. Very important. This H1 candle did what? Closed below. And the reason I'm showing this type of entry is so that you have a tighter stop loss. Because if I leave some people, this is what they're going to do. After this CSD, they're going to just, enter sell around here, put their stop loss here, and target this thing. Now, this is rubbish. This is like 1 to 7 hour. Roughly 1 to 2 hour. So what do I want to do with 1 to 2 hour, as the case may be? You can do this if you want. Do you understand? to risk free or whatever as the case may be. But I'm trying to give you a more decent entry that will do what? Help you have a decent risk to reward ratio. Do you understand? After the CSD occur, we have moved beyond types of trader, buyers. We are now moving into what? Entry. Pay attention. So listen to me. After the closure below this right here, this candle right here, this H1 candle right here that you can see, look at it. That's your CSD candle. That's your CSD candle. This candle you can see right here, that's your CSD candle. The moment CSD occur, pay attention to what? Key level. Now, it can be a breaker or an order block. Now, listen to me. Oh God, pay attention. The moment CSD occurred right about here, what was the next thing you saw? An order block. This is an order block. This right here is an order block. Are you seeing? That's another block. And it is a fresh order block. It is unmitigated. That was why my entry was at this candle right here. That was how my entry was here. This order block. Listen, pay attention. After this order block form, market dumped, and created a CSD. Then it came back to retest this order block, and boom, look at this solid expansion. Now, when you use this type of entry like this, you are having a decent risk to reward ratio. Very decent. This is 1-4. Very decent risk to reward ratio. 1-4, 1-5. Although I hesitated at 1-3 or somewhere around here. So you have 1-4, 1-5. This is 1. 2, you're going to have scenarios. Pay attention. Oh my God. You're going to have scenarios where market will do something like this. Let's say this is the opening price. Market is going to breach the opening price like this. And there will be no key level. There's no order block. There's no breaker, whatever. The opening price can serve as a key level. Price will come back and do what? Tap that opening price. Then it's going to enter back again. That's your entry. You're going to have scenarios like this. There are 3 basic scenarios that oftenly occur when by experience rather now, I've seen occur when trading open high low close of a daily candle. I've seen 3 scenarios, and this is the first one. This one that I just spoke about is the first one, which is actually the most popular that I've seen. Especially when it's a short week and it wants to propel a very quick expansion, you're going to always experience this type. It will breach the opening price fast. There will be no key level around that area. You're going to do what? Just have to trade from the opening price all the way down using a previous breaker block, which is going to be a BPR. Do you understand? Previous breaker block around that is going to be in tune or around that opening price. This is the first example. Then this is the second example. This type that you have a key level around it. Then there's another third example, which if you trade a lot of time, experience is going to show you. So where you have a key level around those axes. Does it make sense? You have a key level around those axes. Do you understand? This is how to trade daily open high low close or open low high close of a single daily candle. Now, you will not target all the way down to this place because this is a long time target. Remember, I told you the reason for this strategy, the reason for this concept, the reason for this methodology and approach is simple. Take a chunk out of the large move and go to bed. Simple. So we're taking a chunk right here, 1-4 hour, boom, I've gone to bed. And this is a trade, if I'm not mistaken. Sorry, I had to just so this is the trade right here. You can see this is the trade. Are you seeing my entry? I'm teaching you what I implemented. I'm not teaching you what I'm guessing. This is something I've implemented and I've done over and over again. Countless times. You're going to check the Telegram handle. I've even become a bit more notorious for somebody that trades open high low close and open low high close of single candle. That's how far it has gone. Do you understand? So this is the first example of trading open high low close on the daily time frame. I'm going to show you trading open, high, low, close on what? The H4. And this will be the last example. Then you can do what? Go and practice as the case may be. But pay attention to this. Listen to me. Don't trade open, high, low, close of a single candle, or open, low, high, close of a single candle from the 30 minutes time frame. And the reason I'm saying that is simple. You need to be a bit more experienced to trade open, high, low, close and open, low, high, close on 30 minutes time frame. You need to be a bit more experienced, because if you're not a bit more experienced, if you're not experienced at all, as the case may be, you're going to get wrecked out. Trust me, you're going to get wrecked out thousands of times. I used to trade open, high, low, close or 30 minutes candle, open, low, high, close or single candle during expansion phases on gold. You know, especially when gold gaps and there's no entry opportunity, whatever as the case may be. I just go to 30 minutes, 15 minutes, and I join the trend, or I join the expansion, or I join the gap itself. Do you understand? So now let me show you. Having said this, I believe we have come to a consensus that you understand what I'm talking about. So now let me show you open, high, low, close of what? The 4 hours time frame. Now, first of all, if you are trading open, high, low, close of the H4 time frame, you need to understand that you are building your bias from where? The daily time frame. That's where you are building your bias from. You are not extending the daily time frame. Then you are building your narrative from that your H4 time frame, and your entry is what's in the 15 minutes. For daily, your entry is in the 1 hour. The 1 hour gives you more confidence. Yes, your entry is in the 1 hour. Oh, can I scale to 5 minutes? You can. I do scale to 5 minutes. Sometimes I take entry to 1 minute. That's how psychologically delusional I am. So I do go to 1 minute to take the trade. Do you understand? But that's being set aside, you need to know how to play around with time frames to be able to do those kinds of stuff. So I'm giving you a much safer method, more safer prescription. Do it on the 1 hour. Daily range, daily open, high, low, close, daily open, low, and close. Entry equals to what? H1. Bias, weekly or daily itself. Short-term bias. Long-term bias, monthly. Simple. This is not complicated at all. Simple. Straight to the point. Now, trading what? Open, high, low, close, open, low, high, close of what? The H4 time frame. Entry is what? 15 minutes. Simple. Bias is what? Daily time frame. Easy peasy. Now, pay attention. I'm going to give you an example, and then we'll call this a wrap. Yeah. We'll call this a wrap. Now, look at this. This is... okay, let me use a different pair so that you know, say, okay, I'm using one pair. The reason I'm using gold is actually because I trade gold a lot. So, pardon me, as the case may be. Okay, let's use Euro USD. Okay. So this is Euro USD. Build bias on the daily. You don't have much problem scaling. Let me zoom out, let me zoom in, zoom whatever. You don't have all those things. It's not your problem. It's not your business. Just map out the single words. Use the highs and the low to build the narrative. And what can you see here? Closure above, which means higher price, right? So you have closure above right here, which means higher price. So you now go and you mark what? This is the high. This high becomes what? Your drawing liquidity. Your immediate drawing liquidity. Bias has been built. Do you understand? Bias has been built. You are bullish. Then this is your immediate drawing liquidity. This guy right here. So you now go to do what? Trade H4 open, low, high, close until this target is met. Remember, the whole ideology of this thing is just to do what? Take a chunk of that whole move until target is met, or just take a chunk and walk out. And listen to me, I need to put something into your head. If you are trading H4 open, high, low, close, if you are trading H4 open, high, low, close of a single candle, the moment that H4 candle makes a high, let's say this is a H4 candle, pay attention, it opens, makes a low, right, and boom, creates a CSD, and boom, it starts making a high. The moment it closes, that's the expiration of that particular candle. You should not hold a H1 open, high, low, close, or open, low, high, close into a daily target, a weekly target. That's being delusional. The daily, the open, high, low, close of a single candle is valid until the candle closes. The moment the candle closes, you should not be in that trade anymore. So if you are trading a 1 hour open high low close, the moment the candle opens down to where the candle close, the moment when the candle opens down to the trading period of the candle, 5 minutes, 1 minute, 2 minutes, and you're not out of that trade and that candle closes and you're still holding, you are wrong. So you should do what? Not be in that trade after that single candle trading model has been completed. Does it make sense? So let's go down to H4 time frame right here. So this is H4 time frame. I want to trade closure above higher price. So I want to trade open high low close until this target is met. Obviously, the price did not hit the target, so good and fine. Do you understand? So, I think the market started somewhere around here, if I'm not mistaken, this Friday. Yeah, so started somewhere around here, right? Now, look at what I'm telling you. If you marked, say, okay, I want to trade this particular candle, you marked it like this, you marked the low, the opening price like this. Are you seeing what I'm seeing? No, relax. I know some of you are saying, oh, this is a CRT, blah, 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 blah. That's not my business. I didn't come here to teach you that. Just listen. If you mark this single candle right here, if you mark this candle right here, this particular candle right here, you mark the opening price right here, and you already see this long wick. What do I tell you about long wicks? Reversal. You don't want to trade them. And you came here again, you mark this opening price, and you see another long wick. What do I tell you? Reversal. You don't want to trade them. But if you see this particular one, you mark the opening price right here. Let me delete this and this also. And you are seeing a short wick. Expansion. Does it make sense? Once the low is becoming long, it's a reversal. Leave that candle. So this candle, if you are trading particularly this H1, this H4, because that's what you're looking to do. Trade a H4 open, low, high, close until target is met. Now, in your detailed precision to try to trade it, you're avoiding reversal candles. Because obviously, look at this. If you are trading reversal candles right here, if you trade this reversal candle, your SL is going to be here. This is rubbish. Trade expansion candle only. How do you know it's an expansion candle? It will have a short wick. Simple. It will have a short wick, or it will have what? A very short wick. So when you mark this, pay attention. Let me show you an example. So you mark this, this opening price for what? The H4. So you mark it, and let's say, okay. So that's now you go down to what? 15 minutes. This is 15 minutes. Oh my God, this is amazing. Now price opened. And look at the low it's made first. All this dash right here is the low being made. Where did the CSD occur? This candle propelled the CSD. This candle that breached above this opening price. This is what propelled the CSD. The moment it breached above it, you can now start talking of what? Entries. This is where you start talking about entries. You can put your stop loss below that candle. That candle that cost a CSD is going to be a safe zone. But more preferably, you can just put it below the low or below the last tick candle, as the case may be, and do what? Target your 1 to 3, 1 to whatever. Now, this was Friday. If not, it would have actually expanded, all the way probably to this high. But remember, like I said, this candle closes. This H4 candle that you're trading becomes invalid the moment H4 is concluded. You can now decide, okay, let me trade the next one. Open, low, high, close, boom. Open, low, high, close, boom. Because that's all you are looking for. Open, low, high, close. Open, low, high, close. Open, low, high, close until this target is met. Simple, easy peasy. Nothing more, nothing less. And I do hope you find value. All right? I do hope you find value. And I'm so sorry that the video became very lengthy, but please do pay attention. Watch it over and over again. Keep it on repeat. It's going to help you. It's going to change the course to which you view, trade, and analyze properly, right? And I do hope to see results, massive results, come out of this video. And thank you all, guys. Thank you once more. And see you in the next video. And yeah, please subscribe. Yeah, I think in case you have any question, you can just join the Telegram. The link is going to be in the comment section. Join the Telegram. The admin is going to answer your question, or I probably myself I'm going to answer your question, as the case may be, right? And yeah, having said that, I think we're done. So thank you guys, and see you next episode. Bye.